Hi, this is Stuart Weems and welcome to the Investopoly podcast. My goal is to give you simple, easy to understand strategies, insights and tips to help you master the game of building wealth. And before I get into this week's topic, I'd like to ask you if you really enjoy the information that I provide in this podcast and the blogs on my website. I would like to ask you for a favour, and that favour is to leave a rating wherever you listen to podcasts. That is the biggest thing, or that has the greatest impact of getting the podcast out there and more listeners listening from it. And what I hope is that if I sit down and write these blogs and record these podcasts every week, that the more the merrier. The more people that listen, potentially the more value that they're going to get from the information that I provide. So if you can do that, that would be greatly appreciated. So let's get into this week's topic then, and the topic is, what is a holistic accountant? And before you tune out and feel like it's a really boring topic, hopefully I can make it a little bit interesting, but most importantly, the concept is really important to understand, particularly for investors. So let's start with the definition of holistic, and if we look at the Oxford Dictionary, the philosophical definition is holistic is characterized by the belief that parts of something are intimately interconnected and inexplicable by reference to the whole. In short, I guess holistic means it's like a puzzle, and each bit is one piece of the puzzle, but you need all the pieces to make up the puzzle. And if you miss a piece, when you're putting a puzzle together, if you miss a piece, you can't finish it. It doesn't give you that sense of satisfaction. And perhaps it leaves clues about what a holistic, accountant can offer you in terms of the value. But also it's important to realize that not all accountants can be holistic accountants, and there's a couple of reasons for that. Taxation and investing are intrinsically intertwined. And that's something that we really need to make friends with and understand. So taxation is typically your biggest lifetime expense. So of course it makes sense to take steps to minimise it. This includes ensuring your investments are tax effective as well, because obviously the less tax you pay on your investment returns means the more that you keep. And therefore the more that you keep means the less assets in total you need to have in order to meet your financial and retirement goals. So if you've got a very tax effective structure, if you like, you're going to need less assets. You're going to be able to achieve your goals or retire sooner, if you like. Take super as an example. It's a wonderful investment vehicle from a taxation perspective because it's concessionally taxed. Now, of course, people debate about whether the government will continue to change the rules with super, and they probably will. But the fact will remain that it will probably almost always be a concessionally taxed environment. So at the moment, you only pay 15% tax rate on income and 10% tax on any capital gains that you make. But if you convert your super into pension phase after retirement, so that is start drawing a small annual pension from your super, the tax rate drops to zero. Therefore, it's natural for most accountants to recommend contributing to super because it's going to save a lot of tax. You get a tax deduction for doing so, and then you shift some of your wealth into an environment that is very tax effective. But if your super is poorly invested, if your accountant says, oh, look, put the $25,000, which, by the way, after 1 July is going to be $27,500, but put the $25,000 into super because it's really tax effective, and you think, great, I want to save tax, I'm going to do that, and you take the $25,000 and put it into your terrible, terrible super fund. Now, if you don't earn any returns, and I know this is not necessarily a realistic example because you're probably going to earn something, but if you don't earn any returns, then the tax rate is irrelevant. So really what you need to be doing is that you need to be, an accountant should be saying, yes, put it into super, but let's make sure that your money is well invested. You're choosing an industry super fund that gives you good returns, low fees, or if you've got a self-managed super fund, how are you investing it, those sorts of things. And this is just one really simple example of how tax and investing is intertwined. You need to make sure that you're maximizing the performance of your hard-earned money. It's working hard for you. And then the second element, you need to make sure that of the returns that you generate, You want to keep as much as possible, and that requires some tax planning. Now, accountants are in such a wonderful position, and the first reason for that is that they're very trusted. So according to a lot of research, and there's different ones, Morgan's does some research each year of the most trusted professionals. And of all the financial services professionals, accountants for a long, long time have been at the top of that list. So they're the most trusted of all the financial services professionals. And the main reason for that is that they tend to be almost always independent. So they've got nothing to sell you other than their advice. And that means it puts them in a great position where they can tell you exactly what they believe without any fear or favour. I guess the only exception to that situation was probably 15 to 20 years ago now, where some accountants, not all, but some accountants were recommending agribusiness investments, tax-effective forestry investments to their clients, and almost everyone lost a lot of money doing that, and accountants were earning commissions off doing that. But now the professional bodies have banned accountants from accepting any commissions, so that's less likely to happen. And I think again that was only a small percentage of the accounting population that involve themselves in that. But most accountants really value their independence and would never compromise it, of course. So the fact that they're independent and they have a high level of trust, together with the fact that they know a lot about you. They know your income, they know a lot about your assets, and et cetera, puts them in a good position in order to add lots of value. So that's a long preamble to really answering the question, what is a holistic accountant? And a holistic accountant is someone that helps you maximise your wealth on an after-tax basis. So it's more than just saving tax, which is how people have traditionally sort of thought about accountants. That's their job, is to save tax. It recognises that no amount of tax structuring or tax tricks can compensate for poor quality investments or a bad strategy. And the most amount of value is harnessed when both those factors are optimised. That is, when a client has high quality investments with a good coherent investment strategy together with a very astute tax management strategy. And that means the value of the whole is greater than the sum of the parts. Now, of course, not all accountants are going to be in a position to be able to give you that holistic advice, and I think there's probably two predominant hurdles that accountants need to get over. The first one is lack of skill and experience. It's challenging for one person to keep on top of both tax and investing, and I don't think accountant necessarily needs to know everything about it, every nuts and bolts. They really just need to have a good enough idea or understanding to identify any issues or opportunities. And if they're successful investors themselves, that'll go a long way of them developing their own personal investment experiences, which naturally helps them become better accountants. But if they work in a multidisciplinary team, so if they work in an office with other financial advisors and mortgage brokers and insurance advisors, etc., they'll be able to workshop ideas. But really, knowledge is going to be one of the key hurdles. And the second one is whether they're appropriately licensed to provide advice. So you need to have what's called an Australian Financial Services license, an AFSL, to give financial advice, and you need to have Australian Credit License to give any mortgage advice. So if you're going to be a holistic accountant, you need to be in a situation where you've got access to those licenses or authorizations from those licenses in order to provide that advice. So not only is it, laborious in terms of professional development and upskilling yourself, but also, fees to hold licenses have increased significantly. Licensing fees, ASIC licensing fees have increased by 160% over the last 2 years. Thanks very much, government, for that. So let's assume the accountant has the knowledge and has the licenses. How do they work? Well, there's two predominant ways a holistic accountant can deliver a holistic service. The first one is where they've got a multidisciplinary team internally within the same firm. And this allows them to sort of workshop ideas and the right hand knows what the left hand is doing. The second option is for an accountant to establish relationships with trusted professionals outside of their organisation. And so if one of their clients then has a particular need, they can bring that professional into the conversation, into the relationship, or make a referral, refer their client out to make sure that's going to work. In theory, that should work really well, but in practice, in my experience, as we've had a go of doing this over the years, it can be very difficult to control the process and the outcomes when collaborating with someone external to the business. And that's why we've decided within ProSolution to use the multidisciplinary team approach. But experience tells us that working in the same office isn't enough in itself. We've got to actually work really hard at ensuring that we're proactively collaborating on a daily basis. And that means we've got to have the right systems to do that and so forth. It really is something that you just can't leave to chance. So who can benefit the most from dealing with a holistic accountant? Well, probably lots of people, but if your situation is really simplistic, then there might not be a lot of avenues that an accountant can add a lot of value, and therefore whether they're holistic or not probably isn't going to make a big difference. So I would probably describe it as the more complex your financial situation is, the more you have to gain from dealing with a holistic accountant. So, if you're a business person or self-employed, you're probably at the top of the list in terms of needing a holistic accountant, because your business income structures need to be able to talk to your investment structures so that you can minimize income tax and then take that profit and invest it tax effectively. If you're an active investor, again, you would probably be second on that list in terms of benefiting from dealing with a holistic advisor, because what you want to do is keep as much of your gross investment returns as possible and pay as less tax as possible. So investors could also benefit from dealing with a holistic accountant. And lastly, to wrap up, how do you find a good holistic accountant? Well, of course, you're going to expect me to say you have found one. That is ProSolution. The firm that I founded, of course, we strongly believe in taking a holistic approach. But if you ask for a less selfish answer, as I've spoken about before, really to find almost all high trust professional relationships, I would go off a referral. Find someone that's trying to travel the road that you're traveling in relatively similar circumstances and ask who they use. And if they've had a really good experience, then that can go a long way to finding the right people for you. And if you want to know more about holistic accounting, Mina and I have started a new podcast called The Holistic Accountant, so you can check that out as well. Just do a Google search or search wherever you listen to your podcasts. Okay, so that's it for me this week. Really looking forward to sharing a great blog with you next week, and bye for now.